Do I need to pay estimated taxes on my crypto gains? In this video, I'm going to talk through everything you need to know if you had crypto gains this year and you're wondering or you're worried about paying estimated taxes. First, we're going to talk about how estimated taxes are calculated and the penalties. Then we're going to talk about when estimated taxes are due. Then how to pay estimated taxes. And then finally, what you can do if your gains are uneven during the year or not consistent, how you can pay your estimated taxes. Let's jump right in. So first of all, if you've made gains during the year, you might be thinking to yourself, when do I pay taxes? In most cases, you pay taxes when you file. When you file your tax returns for the April 15th deadline, that is when payment is due. But if you owe over $1,000, you're actually required to make estimates every quarter during the year towards that tax balance. And so if at the end of the year you owe more than $1,000 and you haven't made payments towards those estimates, you could be penalized and pay unnecessary taxes and penalties as a result. So in order to avoid that penalty, the key is paying estimated taxes. But the way to calculate that is either based on the current year taxes or last year. As long as you pay 90% of the current year's estimated taxes by the end of the year, by the time that the tax deadline rolls around April 15th, then you won't be penalized. On the other hand, if you pay 100% of the prior year's taxes as estimates, the same thing applies. And so what this means is that during the current year, often people don't know what their taxes are, what their gains are, or even if they do know their gains, it's pretty hard to calculate what your taxes are as a result. We've got a lot of other videos that talk about all the nuances and difficulties of calculating crypto gains. And so if you've got crypto gains during the year and you're sitting there thinking, how in the world am I going to calculate my estimates in time to pay quarterly and not be penalized? Well, there's another option. And that option is that you pay based on the prior year. And so if you pay estimates based on the prior year's gains or income, and you pay the total amount of tax in that prior year through estimates, then you won't be penalized. And this is referred to many as a safe harbor. And it's often used so that you can pay estimates quarterly, not have to worry about calculating your current year taxes, and not worry about the penalty. So one option for many people out there listening, that if you have gains, take a look at last year's tax return. And if last year you owed money, well then this year you hopefully have made estimates. And if you haven't, then you're going to owe a penalty. And if you're watching this and there's still time to make those estimates, then you can base those estimates off of the last year, the prior year's taxes, and just break it up in 4 and pay that amount of tax every quarter. And then you should be fine because you've met that requirement. You've paid based on the prior year's tax rather than the current year. So when do you pay your estimates? Estimates are due quarterly. And so it's important to know the deadlines. It's generally on the 15th for each quarterly month, but make sure that you're aware of those deadlines. We're going to put the deadlines on the screen and take a screenshot, save these, because you need to be aware of these deadlines and make sure that you've paid the estimates in time to do so. And so don't just pay the day of. In many cases, it makes sense to even pay a little bit early to make sure that that estimate arrives. So then how do you pay your estimates? Well, if it's the day of, the fastest way is through the IRS's website. But be careful. There are a lot of imposter websites out there, and we get calls all the time from people that pay to the wrong website to someone that's not the IRS. Make sure you're at irs.gov and making payment through there, and also to your states as well. And we'll talk a little bit about states later on too. But one of the easiest ways is through the IRS's website. Also, you can make a payment by mailing in a check. If you're mailing it in, make sure that you include a voucher. The form is a 1040V typically, and you'll include it with your check, and it'll help make sure that your payment is properly routed to the right tax year. We often see people that get notices or tax bills because the IRS didn't apply the payment to the right year or the right place. So make sure that you send the check with this voucher. Also include your social security number and the tax year on your check as well. But what do you do if during the year your gains or losses are uneven? Well, the IRS has already thought of this as well. And when filing your taxes, there's a way to show the IRS that your income was uneven, and as a result, you've paid estimates unevenly as well. And so let's say that you do have a requirement to pay estimates, but the first 2 quarters you didn't have any gains. So you didn't pay any estimates, and you didn't pay based on the prior year either. There were no gains, nothing to pay. But then the last quarter, you had massive gains. Well, then you can pay your estimates in the last quarter, as long as it's sufficient based on the tax due in the current year, and then you won't be penalized. You'll need to show on a form when you file your taxes, as I mentioned to the IRS, that this is the way that the income was earned, because otherwise the IRS will just look at your income on an annual basis and look at your estimates, and if you don't pay enough, then you'll have penalties. So uneven income, not a problem. It's still possible to deal with that. You just have to be a little bit careful as well. So let's talk a little bit about states. So we talked a lot about federal taxes, but if you are in a state that has a state income tax, and that's the majority of the states, you also have to be aware of estimates on a quarterly basis to your state as well. So make sure you first determine if your state has an income tax, and then secondly, be sure to go to the right website if you're paying your state through their website. But you have to be aware of both the federal and state tax requirements. An easy way to make sure that you're not paying too much in taxes or unnecessary penalties is to pay the required estimates. If you don't pay the required estimates, you might end up paying additional penalties, and there's no reason to do so. If you found this video useful, please like, share it with a friend, and comment below with any questions that you have. Thanks for watching.